Welcome to Charts Today. My name's David Linton, and today's edition for Friday, the 18th of November, comes to you from London. And we've got to the end of a week. It's Friday, so looking at the markets, a bit more green on the screen. A reasonable end to the week. We start by looking at currencies, then we'll look at stock indices, commodities, and last of all, energy. And looking at the dollar. Last week, of course, was a really big week for the dollar, much as we predicted. We saw that big fall in the week. That's the weekly candle. Remembering this is my weekly, my daily, my 60-minute chart, my long-term, medium-term and short-term view of the market with the corresponding point and figure targets. This data is, Updata is sitting on Refinitiv icon here, but you could easily be running on Bloomberg, Trayport, whatever feed you like. We've got dozens of different feeds that Updata is compatible with. So just think of it as a platform that sits on top of whatever you've got. But of course, it brings that extra power of being able to look at the trends and targets. And I'm looking at over 1,000 charts a day because literally I just go through and watch my 6 charts change, and it's super fast because basically the data's cached, and that means I can just work much faster. I would struggle to cope with many other systems because I just need the speed of access to make decisions. So looking at the euro, we see that we've come higher here. That was last week. We've held the gains. That's the most significant thing, is we've held the gains. And so we are seeing a little bit of a potential doji candle here for the week. Maybe we'll see a pullback next week. We do have this downside target not activated on the short-term chart, but the key thing is we've held the gains. So that dollar weakness, that end to the dollar, it looks less and less likely that the dollar will bounce and make new highs. Here we see it against the yen, again that weekly candle. A move to bounce back and make new highs is just looking less likely, and of course that will show up in the shorter term charts first. This is the beauty of using the different time horizons. Sterling is sitting at 119.50. Basically the currency seems to have taken the autumn statement yesterday in its stride, so the market has held on to that, and so sterling is still looking better medium term, just crossing the cloud. The long term, this is of course as much about dollar weakness now. That long term move is not yet through the cloud, of course, but we are seeing the medium term, and we've got targets into the 120s. So sterling starting to look a lot better. I had quite a lot of money in dollars myself. Switched back to sterling with this move. It's it's significant. The euro, we're sitting at 115 dead at the moment. So euro sterling rate, and again that's making a good multi-day high there, so that's looking better, and we're just starting to come through the cloud there as well. So sterling, the UK market has taken yesterday's announcements pretty well in its stride. Bitcoin sitting at 16,700, now languishing below the 20,000 mark. Really unlikely to see the crypto market, Bitcoin, getting back above that 20,000 level anytime soon. Got big downside targets here to play for, so it's very much game over for crypto. The S&P 500 index was lower yesterday. The futures today are up, retracing that loss, so looks like the market will open slightly higher. The Nasdaq E-mini up nearly 0.4%, so that's looking a little bit better as well. The FTSE future is also up 2/3, so again, UK market has taken the budget in its stride, I should say the autumn statement. And the DAX in Germany is up nearly 1% as well. So we're seeing markets continuing this relief rally, bearing in mind that it is still in the context of a downtrend. And if we look at something like the Nasdaq, which is, a lot of markets will take the cue, the Nasdaq has a lot of work to do to get back into bullish territory. So these downside targets still do hang over us. We're just seeing a relief rally within that at the moment. Looking at the CAC 40, we're up nearly 1% here. The French market surpassing the UK market in market cap now as the largest stock market in Europe. So that's really quite interesting as well. Currency will be a big factor there, of course. The Japanese market, little changed, still sitting relatively flat over the last year, to be fair, and rising back above the cloud. Asian markets generally are looking okay. The Hang Seng has been the worst looking market, still pretty bearish below the cloud despite this big bounce off the 15,000 level. And of course, Chinese market, I've just last night recorded a 90-minute presentation to be given in China, and looking at all the Chinese stocks. are we forming a double bottom here? This is the big question, and this just applies to any chart. And the simple thing to do is to say, well, when we pass that fulcrum, then we would have confirmed a double bottom. So for the moment, it's potential double bottom. We've got to rise through that level for that to actually become the case. The Sensex in India still holding that 60,000 level, really one of the best looking stock markets going. If we can make new highs, we activate an even bigger upside target. So India's still looking good. And the Aussie market also up slightly overnight, up 0.25%. We'll look at the energy mix in a minute. We've got wheat up 1%, so looking better there. Still holding that long-term steady trend despite the spike up and spike down. Prices in wheat have been, over the very long term, just gradually going higher. Corn is up 0.75% in sympathy, and we're seeing really grains just holding those gains on the long-term charts there as well. We cover these, of course, in our monthly report. Gold is sitting at $17.65. Can't quite break into this $1,800 level. We've got lots of targets there. We've got a new little downside target, and we are just wandering below the clouds. So the little bit of the shine has come off gold, and silver is back above that 21 level. We know that inventory levels on silver are very low, and we're starting to see some quite interesting moves, and especially in silver stocks, which I've been looking at. Platinum is also looking better as well. Copper, a sort of proxy for international activity, well, industrial activity internationally, is actually starting to look better through the cloud as well. US 10-year yields sitting at 3.8%. A lot of talk about yield curve inversion at the moment, where the interest rate level is higher than the yield, so that's quite significant. Looking at Apple, we've come off the bottom, well away from that 130 low that we have to worry about. We're sitting at 150. Of course, Apple, a very big buyback of their shares from the company with their cash pile, and really that 135 level is the short-term level, but that June 130 level is the one we have to watch. But we've got new support really at 135. A lot of talk about Tesla at the moment. I did post on LinkedIn this morning about that. A new downside target, 40% lower if we break below that previous low. So that's really significant. If we break that low that we set on the 9th of November, that will be significant. So we need to just keep an eye on that as well. Looking at the energy mix now, we have got Brent crude up slightly this morning. We did break out of the range. This is my daily and my 60-minute chart. We did fall out of the range on Brent crude. So that's really was quite worrying that we fell through that level, and we got downside targets there. So it's hard to see how today's gains will be held on to. US nat gas really stuck in a range here as well, between 650, 575, 650. That's the range, and we're really trading that range. Some mini downside targets coming in. Coal, fairly static, just trying to get back above that 200 level. That's going to be quite key. And emissions, we're quite close to the end of the calendar contract on emissions, and it's interesting how we just hit that resistance level. We've got some downside targets here this morning as well to watch. Gas prices, we were neutral today on gas prices, just a bit of a hard read really. We've seen prices just seesawing through the week. We've got this range really on TTF between 100 and 125. That's what we've got to watch. The downside target's starting to creep in today, so we are just seeing a little bit of fall away. You need to keep an eye on those 1-minute charts, either on your OTC or on I'm looking at ICE here, and MBP similarly down now around 2%. So we're seeing there a bit of a struggle as well. Interesting that we're finding this support level around 250 for MBP. 225 is as low as we've gone. That we really do need to hold, but does seem that the fall in gas is just starting to slow, and of course on TTF we are hitting the longer term trends there. Last of all, German power, it's actually up a little bit this morning, both on the Cal 23 and the Cal 24, so looking a little bit better there. And Cal 24, which we're starting to watch much more closely, is actually managing to hold that critical 240 level, and that will be really what we're watching for there. Just looking for that level there, just holding, is going to be pretty critical around 240. That's it for today. Have a great weekend. Happy charting. See you then.